We will analyze all of those and much more when our guest Ashish Chaturmata joins in. But the focus is on earnings right now. Let's put the spotlight on Tata Metaliks. You have a sharp jump in profitability, and of course margins have also spiked for this one, and that's reflective on the stock, up about 9% in trade at this point in time. Margins have gone up by about 90 basis points, profits have risen by about 41%. The management is with us, Sandeep Kumar, MD at Tata Metaliks. Good quarter for you. Just talk to us about the highlights here. What has been the volume growth and the realization trends?
Yeah, thanks for the call. We've had a growth 52% in revenue quarter on quarter compared to last financial year. About 11% growth in pipe sales and about 3% growth in pig iron sales. This is in terms of the volumes. And overall EBITDA improvement of about 30% quarter on quarter. So that's the overall story. Of course, the profit before tax is more than 40%, but the EBITDA margins have moved up significantly, and so that's been basically happened because of volume sales as well as cost improvement. These two factors together have helped us achieve a higher number.
Right. In fact, sir, if we talk about your pig iron segment performance, margins have improved quite significantly. Your top line has improved there, and there has, of course, been buoyancy in the domestic pig iron ore prices as well. What kind of realization growth have you witnessed, and also what is the outlook then going ahead?
Yes, in general, the growth in pig iron has been fueled by the cost push from coal coke. So if you look at it effectively, about the coal coke have moved between 20 to 25%. If I would look at coke in particular, over quarter two of FY18, and the growth in prices for pig iron has been almost similar, so close to about 20%. So more or less, whatever has been the cost increase, that's been passed on to the same extent to the pig iron consumers. So for us, the major benefit is coming in from cost efficiencies as well as higher volume sales. Prices have not had a major impact, only a marginal impact.
Okay, but what about the pipe segment? Because there was a contraction in margins over there. Again, was it because of compression in coking coal lump iron spreads, or were there other reasons behind it?
Actually, it's internal, transfer pricing, and that is why you see that there is a compression. Actually, there is no compression. If you look at it for the entire EBITDA margin, starting from raw material to pipe, then the EBITDA margins are more or less similar to what was there in quarter one. Although they have increased, they have remained more or less same as quarter one. Although there has been a slight decrease from last year. So just to simplify, normally what happens is we have the two divisions and we have a transfer price mechanism, and therefore the growth in EBITDA margins for the pipe division does not reflect accurately and is not comparable with others. But if you look at it from raw material stage to here, there has been that's been decent performance. But specifically to answer your question on prices, of course, this is a fact that the pipe prices have not grown to the same extent as there has been a growth in the cost or in the pig iron. That's because pipe prices are more stable. Pipe is a more stable market.
Right. What then, Mr. Kumar, is the trend that you anticipate for coking coal and lump iron ore in the third quarter? How are you seeing them? What can we expect on the margin front for the pipe segment?
I think the biggest problem for us, and I think for the country in general, for the steel industry, would be that the coal prices, which are mostly imported from Australia and Canada, they would get impacted because of rupee depreciation. So that's going to, I think, adversely impact the steel industry from a cost push point of view. Now the next question is whether all of this cost push is you are able to convert that into higher prices or not. That will be the question. As it impacts everybody in the industry, I think there should be a reasonable effort in trying to pass that on to the customer. So if you look at absolute prices, then the coke prices today are at a level of almost about 29 to 30,000 rupees per ton. And going forward, I would expect that price would be at least in quarter three is going to be on a similar range, maybe at about 30,000, and may have a marginal increase because of if there is a change in international prices. Otherwise, it's going to remain more or less same.
All right, so that's as things stand now. But do you have any forward contracts for pipes and pig iron, and that could benefit from the currency and the metal price slide in the third quarter?
Yeah, so typically for the pig iron sales, we go on month because it's absolutely spot. Whatever is the raw material price, we try and pass it on to the customer. As far as pipes are concerned, we are normally booked long because pipe is more stable, and typically it gets executed over a 3 to 6 month period. The pipe contracts would be for a longer duration, while pig iron is more on a month-to-month basis.
All right, what has been the status of the blast furnace operations in this quarter? I just wanted an update because last quarter you had a shutdown.
Yeah, so I think quarter 2 has been a relatively smoother run. And when I say the cost efficiencies which have helped us improve our EBITDA margins, it's mainly coming in through the blast furnace operations only, through better usage of coke, and that's where the main benefit is coming in. We have had various cost reduction initiatives, and those are bearing fruit now, and that's where the benefit is coming. So quarter 2 has been quite a smooth flow, although, quarter to quarter, I think the blast furnace operations need to stabilize. So that as we go forward, we'll see how things go. But at the moment, things are okay.
All right, at the moment things are okay over there. In terms of the status of the hot metal production, you'd had some environmental issues with the facility. What's the status on that? Also the status of the commissioning of the PCI unit and the oxygen plant?
Yeah, so there is no environment issue as such. What we said last year was that our environment clearance limit we had reached last year, and therefore we could not go beyond that, and we had to take a premature shutdown in last financial year. But thereafter we had applied for higher volumes for environment clearance, and we are well on track to get that before the end of this year. So that is on the environment clearance. And what was the other question on? PCI, yeah.
PCI and oxygen commissioning.
Yeah. So the PCI plant is well on track, and I think it should get commissioned by, I would say, in the next 1 or 2 months, and very much on track. As far as oxygen plant is concerned, that should come up, I would say, in quarter 1 of next financial year. So that's already been ordered. The party is started working, and therefore we expect to have that complete by quarter 1 of next financial year.
All right, just a last question then, Mr. Kumar. Overall, how is the second half earnings? What is the expectation on that front if we compare it to the kind of 20-21% earnings growth that we've seen in the first half?
So we don't give a guidance, but in general, I think the performance, quarterly performance, whatever we have achieved, we would expect to do something similar as we go forward. Of course, the pipe business improves in the second half traditionally, especially after November, because the festivities and the monsoons are over. So the pipe business should normally improve as per past trends. Pig iron is more spot, difficult to predict on a long-term basis, would depend a lot on how the raw material prices move. The only negative that I can see at the moment is some rupee depreciation. That would impact almost all the players in the steel industry, because all of them are dependent on coal to a very, very large extent.
All right, Mr. Kumar, thanks so much for joining in, and good luck for the quarter ahead. That's Tata Metaliks for you. From that, let's move on to Radico Khaitan. A strong quarter from Radico as well. A big jump